During the long-term downtrend, there is a firm lower base formed from two bullish engulfing patterns. This area turns out to be a major long-term range, and the shorter-term candles are in agreement as they demonstrate lower wick rejection along with a tendency to close above the 0.785 level. But the market spikes down to continue the existing downtrend to once again remind that nothing is ever a guarantee, even when there are multiple factors in favor of a bullish position. In this case, there was no swift confirmation with a trade or close above the initial bull hammer, and in the longer term context, the downtrend was persisting. Over the next few weeks, three methods following price action emerges. It takes the market lower, but at a slower pace due to the high concentration of single bullish reversal candles. A neutral to slightly bearish tone still remains in the market because although there is a base forming around the 0.75 level, the market is unable to quickly develop an upswing from the candles that trade above the highs of several inverted hammers. The slide continues but is slowed down by this single bull hammer, demonstrating another case where there is no upswing but rather the secondary supporting characteristic where the downtrend is being delayed. This candle on September 29th is indecisive on its own, however it is bullishly engulfed by the current candle to maintain contact with the mid-70s support range of the past few weeks. Bullish sentiment is renewed as the next candle strongly closes above the engulfing pattern. There is a very short-term resistance here around the 0.754 level due to it being the upper boundary of this narrow short-term range, and that is why there is upper wick rejection and the candle closes slightly below. A sign of bullish strength continuing as the current candle has its real body strongly close almost entirely above the previous candle. Bullish strength continues for this developing uptrend. However, there is possible resistance similar to other examples originating from the boundaries seen in the prior downward continuation. And there is indeed some resistance emerging around the 0.77 level, where the prior downward continuation began. And speaking of the 0.77 area, currently there is a downswing forming from this harami, and that initiates a minor downtrend. A rapid drop is followed by hesitation and indecision with the current large doji. This leads to more of the same as a downward continuation forms with plenty of dojis and spinning tops around the resting phase range. Here's another case where a major support level, in this case 0.70, slows down a major downtrend rather than leading to an upward reversal. Now the decline slows significantly with the market moving almost flat as there are more neutral to bullish candles appearing. In fact, the current bull hammer also fully engulfs the prior inverted hammer, and this gives a better opportunity for the market to form an upward reversal if the next few candles strongly close above their highs. Otherwise, it can be another minor resting phase before a further decline. A strong close immediately to confirm the bullish sentiment of the hammer, and this heads towards 0.70, the first major resistance. The key event to watch is whether the market will remain above 0.70, as there is natural resistance occurring now. The market does indeed hold, and that leads to further development of the uptrend. The next major resistance at 0.73 is contacted, resulting in a minor downswing, which is normal given that this is the upper boundary of the prior resting phase. This turns out to be a minor downswing, and a continuation follows to help the market recover after a major downward overextension that is best seen with a zoomed out view. The market starts moving more range bound, and here there are still some familiar candles, including an engulfing pattern along with some single candle reversal patterns. Here is another case where a bull hammer is not a guaranteed upswing, as the strong downtrend effectively negates it. The next candle strongly closes lower instead of trading and closing above it. The current candle isn't a strict bull hammer, but it shows lower wick rejection on the 0.74 level with a longer lower wick and a real body concentrated towards the upper third of the candle. Bullish sentiment increases as a bullish engulfing pattern forms. Now this isn't a close above the high of the bullish engulfing, however it's still green and manages to move higher. The bullish sentiment is increasing. There is some delay, but the current large green candle speaks for itself in accelerating the uptrend, and if this was a stock chart, there would most certainly be higher green volume right now. 0.75 remains a highly influential resistance, so when the market eventually declines further, it is not much of a surprise, as this turns out to be more of a flat resting phase in the longer term decline. In the short term here, these bull hammers eventually apply the brakes at the 0.73 level, and this leads to a significant slowdown despite the continued row of red candles. This is certainly no bull hammer, however it does show strong bullish intent as it does close strongly higher, while the lower wick does reject lower prices, and it fully engulfs the past few candles. When it is combined with this bull hammer in particular, it forms a large dragonfly doji. Remaining marginally more bullish as these two red bull hammers take price down slightly lower due to these long lower wicks rejecting a further push down in the short term. The bullish advantage is gone now, however, the selling pressure is unable to significantly drive down the market, and this leads to an indecisive phase. As this dynamic situation develops, there is a bullish advantage emerging once more. Because of the continued lower wick rejection, the market is unable to significantly push below 0.73, and in fact the current candle closes above the high of the bullish engulfing. This doesn't matter that much since it is delayed for almost a full week, however it is still a minor bullish sign as the market inclines slightly. The market rises back up gradually as there is follow through with gradual closes higher, and eventually there is increasing resistance that lines up with the approximate resting phase range of the prior downward continuation. A somewhat familiar sight with this large green candle continuing the existing uptrend prior to the flattening at this resistance area. Then there is another large green candle closing slightly higher, and it is in fact a continuation, but to the upside. Now that the market has decisively cleared 0.75, there is a normal consolidation range, with the market even dipping back down to recontact 0.75 but remain above it. As a result, the market continues stable and strong during the longer term recovery, where there are several more bullish continuations. Interestingly, in the short term here, there is a bearish star that is bullishly engulfed during the ongoing uptrend, which essentially amounts to some indecision and slight hesitation. When these candles are combined, they essentially form one larger doji. Then there is a more natural bearish engulfing, and there is also some slight upper wick rejection to show weakness in the market to continue moving higher. Minor confirmation with the next two candles trading below the bearish engulfing's low. However, this is not a decisive downtrend yet due to the lower wick rejection, especially with the current candle. Only after the back-to-back lower closes does the possibility of a larger downtrend become more certain. Even though there were a series of major upswings, the Canadian dollar to US dollar returned back to a more decisive decline in the long term. The same significant levels are still highly influential, and there is even a bullish engulfing forming an upswing off the solid 0.75 level.